Ah, thank you. Hey James, how would you approach trading oil? What a great question. Let's look into that. Hello there, this is James, and today I'm answering a really good question on how to trade probably one of the most important commodities in the world. A commodity which practically drives this world currently. But before we get into all of that, don't forget these videos, all the educational videos, are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, today's question was, how would I approach trading oil? And as we know, we practically use oil in almost everything in our lives. Let's have a look at that. One of the most important commodities in the world is oil. It drives our cars, our lorries, it flies our planes. It is key to industrial and manufactural production. It lights our homes, it heats our houses, and then it's also used in so many different products like plastic, rubber, glass, makeup, such as lipstick. As you can see, we use oil for so much. It's not just driving our cars, or, heating our homes, lighting our homes. It's practically everyday use for such, all sorts of items. We're so heavily reliant on oil until obviously we can find a suitable replacement. But what do we look at with oil when we're looking for trading opportunities? Now, obviously, it is a commodity. So as we know in previous courses, like in the Talking Bites series, when we discussed fundamentals for commodities, it's all about two words: supply and demand. Those are the two most important things we need to take into account when we're looking to trade oil. So let's start off first of all with demand. Now, I'm not saying we look at stuff like increase in lipstick purchases, not at all, no. More importantly, it's the use of oil for industrial means, okay? So we need to look at demand for that. So if there's an increase in economic growth in countries like China, which is the #1 consumer of oil for their industry, then obviously demand is going to go up. So that potentially means there's going to be more, need for oil, which can indeed affect oil prices. So on the flip side of that, if we see an economic slowdown in countries like China and the US, then that means maybe in the future there will be less demand for oil. So again, like when we look at currencies, we do look at economic data, like gross domestic product, for example, both for some major economies like US and China. We look at industrial production. Okay, we look at things of this now. Housing. I mean, that's a good, really valid point. Housing. Okay, because again, it's manufacturing, isn't it? So a bit of a story time here. 2022, there was a big sort of like, brinkering on a housing crisis in China. Okay, which then sort of gave the market a bit of a concern that there was economic slowdown. So again, we do look at a lot of that sort of information. What oil is used for when it comes to manufacturing and industry. Is there a growth or is there a slowdown? So yeah, again, underlining key economic indicators for China and for the US and major economies, EU as well. So again, GDP, manufacturing production or manufacturing, industrial, housing. These are some of the key things we look for. Yes, we do take into account interest rates as well. Not so much like we do for currency, but interest rates. Because, of course, if they're increasing interest rates, okay, then it may be more difficult for businesses to borrow money, be more expensive for them. So that might also cap business growth. So again, that's a major thing. So again, we look at growth. Is there growth in economies, which means there's going to be more need for oil, or is there economic slowdown? So yeah, that's the first thing we look at when we're looking to try and establish demand. Supply. Now this can be a major factor in oil prices. Now you do have, again, key economic information coming out about supply. First of all, you have, of course, obviously US crude oil inventories, which is usually released, I think, either on a Wednesday or a Thursday every week. Now, back in the day, this used to be a major mover for oil, because what the US crude oil inventories indicates to us is that how many barrels of oil have been stored in, is there in the US inventory, in their warehouses. So if there is a big increase in inventories, that means there's plenty of oil. So again, it's over, it's too much. So that can impact prices. But if there is a reduction in inventories, as in inventories are decreasing, that could indicate that supply is waning. So that could impact prices. However, like I say, the US crude inventories used to be a big mover, is not such a massive mover nowadays, but it's still something to keep an eye on. The other way we can establish supply is oil rig counts, because we're looking, it's not just oil coming from the ground. Obviously, it's oil coming from the sea as well. And like I say, we take into account, how many oil rigs are producing oil. So there's the oil rig count. So you need to keep an eye out for that. That, again, you can find on financial calendars and economic news, reporting how many oil rigs are in, full production or performing well. So again, that's a major thing to look out for when it comes to supply. The other thing to look at is, bear in mind, what countries, produce oil. Then obviously you've got the Middle East, we have Russia, we have Canada, we have Norway, we have Nigeria, we have a number of nations. So if there is something happening in those nations, i.e. conflict, then yes, that could affect supply, which on a knock-on effect can affect oil prices as well. So again, that's something. Let's go to another story time. 2022 again. I was very active and I talk a lot about 2022. But obviously we had the Russian-Ukraine conflict, which is, as of time of recording, unfortunately still going on. Russia is a major oil producer, so guess what? Oil prices skyrocketed on the back of this. So conflict is another thing to bear in mind, and what is happening on those countries. However, I think the most important thing to take into account when you're trying to identify supply is OPEC, Organization of Petroleum Exporting Countries. This is very, very important to be aware of what they are doing. But first of all, let's have a quick look at what OPEC is. OPEC, or Organization of Petroleum Exporting Countries, was formed in 1960, and it consists of 13 countries, which includes Iraq, Kuwait, Saudi Arabia, Iran, Venezuela, Nigeria, to name just a few. It is estimated that OPEC produces 30% of the global production, and they meet on regular occasions to control prices. In these meetings, they have the power to decide to increase production or decrease production. This greatly affects supply. And when supply is affected, it affects the price for consumers who pay what they pay at the pump, as well as the market. Now, OPEC is extremely important to oil prices. There is also OPEC Plus, which includes a few more countries into it. They're not actually a full member of OPEC, they're part of OPEC Plus. That includes the likes of Russia, etc. Now, OPEC and OPEC Plus has the power to decide how many barrels of oil they are going to produce. In fact, they are basically a cartel. So if they are not happy with oil prices falling, they have the power to cut production to bring prices back up. At the same time, they also have the power to cut production to hopefully bring prices down. Now, in my opinion, what OPEC is doing is probably the most important factor about oil prices. And I'll give you a prime example. This is today's recording. I'm recording live, obviously, today. And straight away, there is some news about OPEC today, which has affected oil prices. And I'll read this to you, okay? My trusty mobile. Right. Now, this also talks about Brent, but Brent is another commodity, which we'll talk about as well on a later video. But it says here, crude oil futures traded lower at $75.24 a barrel on the back of rumors that OPEC and OPEC Plus are going to discuss decreasing output levels. So today, practically, because of this rumor about OPEC and OPEC Plus talking about cutting production, oil fell by about $1 today at the time of recording. He also goes on to say, and this is what's quite important as well, OPEC Plus to start their meeting this week, okay, again, it's the time of recording, at 1 p.m. GMT on Thursday, which is November the 30th. So straight away, they're going to start their meeting to discuss what they're going to do about production. And straight away, that has impacted oil prices. So like I say, OPEC and OPEC Plus have so much power to affect supply of oil, and this could really affect oil prices. So I think what OPEC is doing and what they're planning to do, when you're an oil trader, you really need to be aware of what their plans are or what the rumors are related to what they might do, because this is probably one of the biggest impacts for supply. I mean, like we've already said, it's estimated they deliver 30% of global oil production. So it is very, very important to find out what they are up to and what they are planning to do. The other thing, moving away from OPEC, the other thing to take into account when it comes to finding out about supply and how supply might be affected is the weather. It's not as important as OPEC or OPEC Plus, but the weather. You do have sort of hurricane season in the US. Now, hurricane season, obviously, can affect the Gulf of Mexico. And in the Gulf of Mexico, there is a good number of oil rigs, which can be affected by, obviously, hurricanes. They could be wiped out or they can be taken out of production. So you do need to bear in mind in that. Another story for you. Okay, I'm full of stories because, like I said, I've been in the industry for nearly 20 years. So I got lots of stories. But this goes back to 2008, I think it is. I was actually, surprisingly, I wasn't an oil trader. I was a gold trader. People who know me knows I'm a gold trader. Anyway, back then, oil and gold used to move together. They don't anymore. But anyway, I went in to see what happened to oil because I was looking to place some gold trades. And there was a big hurricane about to hit the Gulf of Mexico. Okay, there was a lot of talk about this, a lot of fear about this, thinking it's going to affect the oil rigs. So I went in at 3 a.m. in the morning to get ready for this outcome. okay, and getting ready to looking for trading opportunities because the storm was coming in and it was going to potentially affect all these oil rigs, which will affect the price of oil, and but also, you know, hit supply, maybe push oil up, which also meant, because I was a gold trader, gold would follow up. So I was getting ready, 3 a.m. in the morning. I remember I went in, and long story short, nothing happened. But anyway, I was still aware of it, and I was still taking this into account to bear in mind potential trading opportunities with it. So yeah, that's supply, demand. The other thing to bear in mind, which obviously can affect, affect supply or affect oil prices, is like everything else, is market sentiment. If the market is bullish and there's growth on the horizon, again, we could see a rise in oil prices. How I engage market sentiment, again, there's lots of market sentiment videos. Obviously, I would look at the VIX, but as well, commitment of traders report as well. There is a commitment of traders report on crude oil as well, so you can check that out and engage, what's happening with the sort of the physical buyers as well as the speculative buyers. So don't forget, if you don't know what commitment of traders report is, don't forget, go back to the trading school and watch the commitment of traders video, which is market sentiment video in the trading school. Check that out. And anyway, but yeah, I do look at the commitment of traders report at crude oil when I'm looking to trade, looking for trading opportunities with, what they say, the black metal. It's not black metal, but oil, Anywho, let's have a quick look at some technicals on oil. Now, when I approach oil on a technical side, I am a bit more of a position trader with oil. So I would look at the overall trend of where the direction it is going. And as you can see straight away on my chart here right now, I have it on a daily. Okay. If I have a look at it on a weekly, again, it gives me a bit of the overall impression of the direction. As you can see on this little bit here, I can see by looking at my chart, it was an uptrend till around about $123 is back in May 2022, which of course, as we discussed, this was, the Ukraine conflict. It has since obviously tapped off a little bit at the end of 2022. This was due to the fact that there was concerns of slowdown in China. But as it stands now, it's currently ranging. So let's have a look. Let's put a couple of lines in where I let lines of areas of interest there, where we can see again. I'm using price action again, where I've seen the buyers and the sellers in the past. Okay, and we can see it there. This is on a long term. So currently, on a long term, it's ranging between these levels. If we're moving closer here, we can have a better look at it. So yeah. So those are two levels, again, straight away on interest. Let's go back to a daily. Let's have a look at it, pull out a bit so we can have a look. Right, as we can see, so on a daily, it was on an uptrend. This looks to me a little bit now, currently, like a potential downtrend. So we then just put our lines in here, capping off here like that. Let's do that a little bit better, James. There we go. It's not too bad. So again, okay, here is on a short-term trend, a potential area of interest here. So potential resistance, as we can see, it's on a downtrend. Let's also have a look. If we want to try and establish the overall trend, let's put in some moving averages as well. Trend, moving average. Let's do 100 here. Nice blue color. Again, a case under the moving average. So yes, it is indicating it's currently on a downtrend. Let's do a crossover as well. Let's put a 50 in as well. Make sure we change the color so we don't get confused. A nice red color there. Boom. Okay. Yeah. Okay. We look at the weekly or longer term picture. Yeah, we currently are in a downtrend here currently. Okay. In fact, what a long term, that's proving where our trend line is actually on a long term. We've put in is a key area of interest, potential resistance. Let's go back to a daily and have a look here. So yeah, right. What else would we do on a daily? What else I would use? To be fair, I would use a bit of Fibonacci with this as well. So let's start from there. Back up our areas of interest. There. Okay, it's Fibonacci. Yeah, so if we look at on a weekly, see what it looks like on a weekly as well. There. Okay, look at this. That really does show that's a key area right there, because we said we put our price action line in. It's now doubled up with the Fibonacci as well. So yeah, that is a very, very key area of interest. At the same time, where our trend line is, yeah, we can run the 50% on the weekly, so back on the daily. So yeah, that's where we can see some areas of interest. So yeah, again, like I say, when it comes to oil, I am a little bit more of a position trader, so I do look at the long-term aspects of it as well. But yeah, straight away, these are the key areas right here. Again, on a daily, I will look at. But if I was looking for a real longer term, these would be the areas. That would be the area I'd be watching. I'll be watching right there as a potential support level on a longer term trade as well. So yeah, that's a little bit of how I would put some technicals in when it comes to oil. So there is a bit of my, technical analysis approach to oil. Like I said, again, price action. But like I say, when it comes to oil overall, pitching on a technical basis, I am more of a position trader with oil. So I do really pay more attention to the fundamental analysis as well. The final thing to talk about when looking at trade oil, okay, yes, it's able to trade 24 hours a day, 5 days a week. Unlike currencies, it's not affected necessarily by trading times. It can still have volatility in the Asian session, especially if we start getting Chinese data out at that point as well, because like we've already said, China is probably the biggest consumer of oil. So the Asian session can be volatile. All I would say is when you're paying attention to the trading times with oil, don't forget the London session is got more players in it, so there's going to be more traders, and the New York session is going to have more traders. But unlike currencies, it's not so heavily influenced by trading times as well. The other thing I seriously, point out that you have to pay attention when trading oil is oil as a CFD is often linked to future contracts. Okay, future contracts, which means potentially that that position you open might have an expiry date. Okay, might have an expiry date. It could be a month contract. So if it has an expiry date, it doesn't matter when you open it, it will close on that expiry date. Okay, so even if you say you open the position today, tomorrow, because the expiry date, it could close. And then obviously they will then allow you to open a new contract. So you have to pay attention to that. So whenever you're opening, depending on your plan, if it's a short-term trade, that's fair enough. But if you're looking to be a position trader with oil, pay attention to the contract expiry. This is not always the case with every broker. Some brokers will allow you to trade what's known as spot, which necessarily won't have an expiry date. But most brokers with CFDs, certainly with oil, is linked to future contracts, and it quite most likely will have an expiry date. So do pay attention to when that expiry date is. Okay, so make sure you don't get caught with that. So anyway, in a nutshell, when it comes to trading oil, the big thing for me, because it's commodities, all about demand and supply, or supply and demand. It's all about those two things. Okay, so when it comes to demand, I look at economic growth in China, US, EU, major economies. Is there growth in industry, growth in manufacturing, growth in housing, growth in GDP, etc.? I look at that. Okay, I also at the same time then, when I look at supply, which is again a major important thing, really it's all in my mind's eye what OPEC is planning to do. What are the rumors about OPEC? What are they planning to do at OPEC and OPEC Plus? Plus, of course, I do pay attention to other oil-producing countries and what's happening with them. Signs of conflict, things like this, which can greatly affect oil prices. Then, obviously, we've got technicals. which we've looked at. Market sentiment, you know, how the market is feeling. All those sweet feelings or bad feelings, how the market is feeling. And again, like I say, you know, I always would, you know, depending on my plan, you know, make sure I know when, if it's a CFD, if it's linked to futures, if there is an expiry date on that contract. So yeah, there we go. That's how I would look or approach looking at trading oil. Anyway, I hope you found this video interesting and insightful. Don't forget, we've got other videos coming down the line, of course. But anywho, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.